Everyone asks me, what's the maximum I can give to my kids each year? But here's the problem. There are three different maximums. Let's go over the numbers for 2025 and 2026, and then I'll show you how do you structure your gift to make the most use of these numbers. Instead of thinking of just the one limit, what's the maximum, you need to look at it as if there's three different phases. Here's that first phase, the first number you need to know, the actual limit. The actual limit, the maximum the IRS will allow you to give to your kids, to anyone, is no limit. There is no limit at all. You can give as much as you would like. The IRS is just keeping an eye on, did you get over a certain dollar amount before they start taxing you? That certain dollar amount, when the IRS starts taxing you, that is called the lifetime exemption amount. The next number is known as the annual exclusion amount. This is the amount you can give to anybody before you have to report it to the IRS. This is probably the number you're thinking of when you're wondering what is the limit. That's the annual exclusion. For 2025, that limit, again, no limit at all on what you can give away. For 2026, still no limit at all. This lifetime exemption for 2025, the amount you can give away over your lifetime before the IRS starts taxing you in 2025 is $13.99 million. Now this is for you individually as the donor, the one giving away money to individuals. So if you're married, if there's two of you, that number is doubled because it's $13.99 million for each of you. You would have to give away $14 million before the IRS starts taxing you. For 2026, that number grows to $15 million. Now this is per person, per donor. This is how much you can give away before the IRS starts applying the gift tax to you. That annual exclusion amount for 2025, how much you can give away to individual people. This is based on each person that you give money away to. That's $19,000. And for 2026, that number is exactly the same. For 2026, you can give away $19,000 without having to report that to the IRS at all. You know the numbers, but how do you get the most out of your gifting strategy? I'm going to answer your top questions about the gift tax and show you how do you structure that gift to keep your taxes and your paperwork to a minimum. While I get that set up, make sure to subscribe to the Mr. Retirement YouTube channel where I show you how to get more income, pay less taxes, and avoid big retirement mistakes. I'm going to answer your top questions about the gift taxes first, then we'll go into how do we structure the gift tax to keep those paperwork and taxes to a minimum. The number one question I get about the gift tax, other than what is the maximum, is, all right, I'm giving a certain dollar amount where I'm not going to pay the gift tax myself, but what is the gift tax to my kids when they get the money? The answer for how much your kids will pay in gift tax is zero. There is no gift tax at all on the federal level for receiving a gift. Now, there might be a state where there is a state gift tax, so make sure you talk to your local CPA before you make that gift if you're in one of those states. The next question you might have is, all right, I don't pay any gift taxes, the kids don't pay any gift taxes, but what if I give my kids IRA money? How much gift taxes will the kids pay when I give them IRA money? The answer for them, again, is zero. They will not pay any gift taxes at the federal level for receiving your IRA money. But what about you? If you take money out of your IRA, if you happen to sell perhaps stocks to bring the cash out to give to your kids, whatever the tax consequence is for taking the money out of the IRA or selling the stock, that's on you. That's on your income tax return, but that doesn't affect at all your gift tax situation or the kids' gift tax situation. Which brings us to the third question, a situation where the kids may actually pay some taxes. We've talked about giving cash to the kids. A common thing to think of is what if you give stock or mutual funds? If you're gifting investments to the kids, what happens then? This is a different story than when you give cash. When you're giving stocks, we'll go with stocks as the example. If you give the stocks to the kids, you're not just giving the stocks, you're also giving what's known as the cost basis. You're also giving the kids the tax situation, where now they own the stock, and let's say that stock is $10,000 in value, and your cost basis, what you paid for that stock, is $5,000. When they receive the stock, there's no gift tax, there's no income tax for them, but now they own the stock. If they start receiving the dividends on the stock, that's on their tax return. If they happen to sell the stock, if they happen to make that $5,000 in a capital gain, short-term or long-term, depending on when you bought that stock, then that capital gain shows up on their tax return. So that's something you want to keep in mind. If you're giving stock to the kids, you're also giving them the tax situation. This could work out well if you're in a higher tax bracket and they're in a lower tax bracket. This could work out not so well if you're in a lower tax bracket and they're in a higher tax bracket. So how do you structure your gifts to keep your taxes and paperwork to a minimum? Remember, in 2025, the maximum you can give away, that annual exclusion before you start reporting it to the IRS, is $19,000. And in 2026, that annual exclusion amount is also $19,000. If you're trying to give away more to the kids, imagine you're giving away this money towards the end of a certain year. And you could give away money this year, or you could give away money next year. These exclusion amounts are based on a calendar basis. You can take advantage of the way that the exclusion works, which is per person that you give out to different people, and per person that perhaps your spouse, if you're married, gives out to different people, and it's on a calendar basis. Imagine you're married. You've got spouse 1, you've got spouse 2, and you have 2 kids. You have kid 1 and you have kid 2. Each of your kids are married. They've got a spouse, kid spouse 1, kid spouse 2. And you might be giving money both this year and next year. If you're trying to get the most of how much you give out to the kids, here's how you'd structure it. Let's see how much you can give away in a short time frame just by taking advantage of how you can give away the money per person and per tax year. Let's look at yourself, spouse 1. In 2025, you can give away $19,000 to kid 1. In 2026, you can give away $19,000 to kid 1. You're up to $38,000. I imagine if you give $38,000 to kid 1, you're probably also giving $38,000 to kid 2 over those 2 different tax years. Now, if you're married, that your spouse can do the same thing. They can give away in 2025 and 2026 $19,000 per year. And they could give away to kid 2 $19,000 per year. How much can you give away then as a maximum without having to worry about the paperwork? Here we are, if you're married, and we're looking just at kid 1, there's $19,000, $38,000, $57,000, $76,000 that can go to the first kid in a short time frame. Perhaps you write a check at the end of December and early in January. Then you're giving away money to kid 2 as well. You're probably keeping it equal. 19, 38, 57, 76,000 going to kid 2. You're over $150,000 that you've given away now without having to worry about the paperwork. But if each kid is married, you can double that number because it's per person. It's not per family. If you're giving $19,000 and beyond to one kid and you want to give more and they're married, you can give that money to their spouse as well. Here we go. We're giving more money this year, next year to the spouse. Your spouse is giving their spouse more money this year and next year. And of course, if you did it to the first spouse of your kids, you're probably also giving the money away to the second spouse as well. If you're looking at how much can I give as a maximum, thinking $19,000 is the maximum to that one kid for this year. If they're married, if you're married, you add this all up for this year and next year, your spouse and yourself, their spouse, that is $152,000 that you can give in a short time frame to that family, which means you're also probably doing the same thing for the other family. Now, those are the maximums per family without having to report it. What happens if you go over? If you go over that $152,000 amount with the way that you structured it, or maybe you didn't quite get there, you forgot how to structure it correctly. Not really a big deal at all. Just file Form 709. That's a form that is tracking how much have you given away towards that lifetime exemption before the IRS starts taxing you. That's Form 709 when you're giving away a larger dollar amount. Now that you've learned how the gift tax really works and how you can structure your giving to keep your paperwork and taxes to a minimum, make sure to check out my video where I show you how the new senior bonus tax deduction can help you save thousands of dollars on your tax return. Hi, I'm Jeremy Keil. If you'd like to learn how my team can help you get more income, pay less in taxes, and avoid big retirement mistakes, head on over to keilfp.com. That's KEILFP.com.